Good evening, afternoon, everyone. We're going to have an investment workshop and dealing with $3 million. Jody.
I guess I'd like to just start, ask Dennis to start. I mean, some of us were here when we first got this money and how we ended up with $3 million. Could you kind of just take us through that briefly? How we got to the point of how we got it back from the state, why we have a $3 million investment?
My understanding is essentially we had been paying into a retirement investment fund at the state level, and it came a time when the state felt that some of those funds needed to be, in a sense, returned back to the municipalities. And in a nutshell, we took those funds back from that investment account, and we've been investing it in the CD for the past, at least the past 3 years. And the interest rate that we've been getting on it has been 3%. And so we were accruing about $90,000 a year in interest, which was actually covering the majority of the costs that we are required to pay into the state retirement funds for all of our public safety personnel. So we got it from the retirement system, and because of the interest rate we've been getting, we've been able to continue to contribute into that retirement system as mandated by the state through the Public Employees Retirement System program. So
Yeah, so that just brings people up to speed. I was here when we initially got the money back, and when we did the investment, it went out for, I believe at the time we set it out for RFQs to the local banks, whatever, and they came back with proposals for us. There was no investment committee at the time, I do not believe. It just was the council, and then we chose the best option at the time. So the time frame, we have two separate CDs, correct?
there's one for $100,000, which was just recently renewed for the 3-month period. So that will expire at the end of July.
Matures at the end of July?
Right.
So a 3-month extension,
Right.
okay. That for the same interest, or?
Well, it was not an extension. It was in a sense, a 3-month reinvestment so that we could have the $100,000 and the $3 million mature at nearly the same time.
Okay.
The $2.9 million CD matures the first part of August. I believe it's August 9th. And so we're going to be pretty close as far as both of these. And the current financing company, they gave us about a week's notice previously, and hopefully we're going to get ahead of it this time, that as these things come up, we'll be able to have a better plan of how we want to reinvest these funds.
The reason that we had the 2.9 million and the 100,000 is probably because it's fully covered by insurance, as you mentioned on the.
Right.
That was the only reason to do that.
Right. Yeah, our finance director, Carl, provided you a short memo. We are mandated by the state on what we can and cannot invest in, and the risk that we are able to take with public funds. Just to highlight that for those that might be listening. So there's 3 key things we have to keep in mind. Investments need to be in a low-risk, fixed interest rate investment, where these are public funds, so such as a CD, checking account, or savings account. Investments need to be fully covered by insurance. And so if you are putting it into a bank that's FDIC insured, or a credit union, savings and loan, if they have the FDIC insurance, that generally takes care of that. And then the third needs to be safeguarded by securities against any municipality loss. So we can't invest in any private business or corporation with the funds. So we have very limited options as far as being able to go out and invest these funds. It's not like we can turn this $3 million over to an investment firm and say, take this and go make us 8 to 14% a year. which would be great, and some people are able to do that. These funds have to be much more safe and secure in what we do with it.
Because we're not able to touch any of that 3 million for any use at all. It has to stay
The
reinvested. We can use the interest, but not.
At this point, the terms of the CD are we could tap into this whenever we wanted to.
Okay.
In fact, even after this 3 million matures, the city could say, we don't want to reinvest it. We want to just put it directly into our checking account, and we'll have it there as cash flow protection or use for what other means the council might direct.
There's
Good point.
nothing in the federal, in the bonds or anything through the federal government that could be invested in.
Yeah, we could look at
It
those.
depends, well, I'm just saying that just for the fact of, I don't know what it pays. I'm just throwing ideas, spaghetti on the wall. If there's something with the federal bonds or something that we could gain more, maybe that's something we should take a look at.
This last round with the $100,000 and looking at that, we asked what is the current CD rates under this current CD market, at least with the financial group that we've been having it with, and they indicated it would be 0.7% annually.
0.7%.
Annually.
That's on a 1 year. It wouldn't be much more even if
It's
we.
not even 3/4.
Right.
That's annually.
And we're currently getting 1.33% on our checking account.
I believe we have Mr. Hagelstein.
Listen to me, because I heard about this. My name is Bruce Hagelstein. I live here in Caribou. And I heard about these CDs coming due. And man, right now after the feds, because of what's going on out in the market right now, the feds have lowered the interest rate basically to 0. So you're not going to get anything local from any of the local banks of any substance, in my opinion, unless you have enough clout to do some serious negotiating with them to get a higher rate. My thought on this is I didn't know these rules apply, what you can do with the money, is like you were saying that, is there some government bonds that would be approved, that could possibly be an option depending on what the rates are, but I know those rates are right down also. The other thing that I'd be real curious is whether it be allowed to go into municipal bonds, which is basically cities, states, whatever, will float bonds in order to finance public projects within their states or cities. And they are a guaranteed income, and they pay it monthly. Or you could let it sit there and let it roll over, and it will grow. Now, if you're using this to pay your retirement right now, which is kind of a slick deal, you're generating enough to pay your retirement. With muni bonds, like a muni bond mutual fund, which gives you the best multiple all over the country, and you get a better return, you probably get at least 5% return on your money, and they pay you monthly into it. So you could either buy more, or they send you a check every month, and you can do with it whatever you want. Set it up in a kitty so you pay off the retirement or whatever.
Just would depend whether those are
Yes,
secure. Yeah.
I don't know if that would be
Yeah.
acceptable, but I wanted to throw that
Oh,
out there.
absolutely.
Because it is conservative.
Mhm.
They're very conservative, but a lot of people swear by them on an individual basis because you don't have to pay any federal tax on them. Individuals. So I don't know whether that's acceptable or not. Now, for CDs at banks, if you go just to the local banks, they're going to tell you what their rate is. You say that the city works with a financial group or some financial gurus or analysts or whatever, advisors, financial advisors. I would definitely have a talk with them and say, here's our situation. What is the best that you can find out there within these guidelines? Because I'm thinking if you go to banks here like Aroostook City Loan, Machias, their local banks, or Katahdin, that's a local bank. But if you're talking Key Bank, that's not a local bank. That's based in Massachusetts. TD Bank, that's not a local bank. That's based in New Jersey. So the money, if you want to try to keep things local, you don't have that many options. So that, my question is, do you want to keep it local? If you keep it local, then all of a sudden changes things, and you're kind of stuck with what you got available: credit union and a couple of banks. If you're willing to open the horizon a little bit, because with this kind of money, I cannot believe that a good financial advisor cannot go and find you something with either J.P. Morgan, Citibank, Bank of America, some of the big boys. They'd be willing to negotiate and get something better. Now, on your CDs, do you just do it on 1-year term, 2-year term, 5-year term? What's your standard length?
This was a 3-year term
A 3-year
for
term?
this CDs.
Okay, but I really think it'd be worth, especially as low as they are right now, is to really shop around and see what somebody can do out there on the CD market. I know personally, I've gone through my financial person, and he found me a CD that paid a heck of a lot more than the banks paid. And I was more willing to invest in it, and it was guaranteed. Now, you say they guarantee, for FDIC guaranteed, that's only up to $250,000 unless you've got something other negotiated with a bank. Per account, it's $250,000. So if you got $3 million, you're going to have to split that up into multiple CDs. So you don't go over that, because if something happens, anything over 250, you're on your own. I mean, it could be gone.
Is that in one CD right now?
This 2.9 is in one
Yeah,
CD,
see,
right?
There's
now.
no insurance on that. I mean,
You're only covered for 250,000 of that 2.9 million.
I haven't seen the terms on the CD itself, so we'll have to look at that. Yeah.
That's another thing, that by going this conservative and you want it guaranteed, it's gonna have to be split up into blocks that I would say, to give you some legal room, probably 200,000 a CD. So you know you got coverage for insurance as interest accrues and it is either kept in it or whatever. You've got room there. So and as soon as you hit 250 in that one, you can take whatever interest you got, it automatically rolls over into another one. And it starts another one. So you don't get caught with your short stack if something happens. In these financial times right now, who knows? Who knows? This thing isn't over with yet. I mean, we're a long ways from it. But I just wanted to throw in my 2 cents worth.
Yeah,
So
absolutely,
Steve,
absolutely.
no pun intended. But I think a little bit more research has got to be done. And I know a very good financial advisor who would probably walk you through some things and wouldn't charge you anything. He's been very good to me, I'll tell you that. And I know he does a lot of things for companies and so forth. But if you've already got one, that's great. But I put a little pressure on him. You say, here we got a sizable chunk of money. I can't believe you can't do better than that on a guarantee on there. And I am concerned if you have 2.9 in one CD from the insurance standpoint. That's especially when you have, I would definitely check into that to see if there's some clause there that says that is covered. I'd be a little nervous on that one.
yeah, I agree.
So definitely, you can look into that for us in terms of terms of the CD. So if we do go that route again, we'll make
Say
sure.
that again.
Well, he's gonna look into, the city manager's gonna look into the terms of the CD. the insurance.
Yeah,
So if we
yeah.
do this,
Figure out what you got
if
first.
we know if this is what the choice is down the road, we'll make sure that we get it done correctly. Because if I
Well,
remember,
there's still 3 months of Harry ahead of us.
because I think that part of the, if I
I think
remember,
should be addressed right away.
the reason we got the 3-year, we got the 3% is because we went on a 3-year term with
That
previous.
That is right.
If I-
The longer the
You'll
term, the
go-
higher the
We,
rate.
That's
they
right.
said, we're gonna give you this at the time that people were dealing with, so we'll give you a little bit more, but it's gonna have to be, we want 3 years, because then they can take that, obviously, and
You
do
know, if
whatever
you
they have
wanted
to do with it.
keep, maybe locally, you may be able to get the 3%, or pretty close to 3% if you went out 5 years. Local banks, that's as far out as they'll go, is 5 years. So, it's food for thought, definitely check into that to see what the rules of engagement are. And the other thing, I would certainly, whoever runs this at the state, it tells you what the rules are, is ask them to say, what about government, treasury notes? What about, municipal bond type of thing? Just, if nothing else, for information's sake,
Yeah.
to say, okay, yay or nay, one or the other, because I can't believe that they wouldn't allow you to do something, especially the way it is right now.
So I think a lot of that tightened up in the past years when these municipalities were going out, living high on the hog and rolling her hard, and investments on the open
Stock market.
took them right to their knees, and
Yeah.
and I think that's when, is when all these guidelines came into effect to, but still, it should be.
And that's fine, it still doesn't hurt to ask.
Oh, absolutely not, absolutely. We gotta see what we can earn, and we're bound to do the job for the people, to get them as much as we can get them safely.
Safely, that is correct.
One interesting thing that I didn't know about until you brought it up here a few minutes ago is that we can split this up. I didn't realize that we could do a couple
Yes.
Yeah,
options, which
the insurance thing is something that
Right.
will
two
kind of
different,
dictate
two different.
how big you go.
You go with some bonds and a CD, depends on what. It's all an investment, I guess it wouldn't matter.
Was it originally invested for 3 years, thinking, God forbid, if we had to touch it, it would be available in 3 years? Was there a thought process there?
I wasn't here at that time. I couldn't tell you for sure what the thought was.
I think there was a question that if we had to, we could have gotten into it.
With penalties?
Yes.
Yeah, I think
Yeah.
it's been a while, but we could get into it if
It's
we
a
had
dire
to.
need.
You can get into it, or part of it, whatever.
And that's really another question is how flexible do you want to be with the funds? If you tie them up, all of it into a 5-year CD, is the penalty risk greater or less than your willingness to have those funds? If the intent is, let's continue if we can get $90,000 a year of benefit to the taxpayers by leaving that money alone, just let it sit, then your comfort level with a 5-year term CD at 3 or 3.5% or 2.5%, maybe that offsets your desire to
Okay,
have liquidity.
is that your goal? Let me reverse it. Is that your goal to earn $90,000 a year? Let's work it backwards. Is that the goal?
No.
If that's-
There's no goal here.
Well, it's.
And let's just say that that we didn't have this virus and this thing hasn't bottomed out. This came due, and regardless of all we would have looked into, okay, how do we get more?
Mhm.
Not 90. We're not happy with 90. No, how do we get 120? How do we get 150? I mean, the same thing we're talking about here would have taken place regardless of the virus or any of that.
Right.
So there's no goals. and
Well, I
we're-
just wanted the.
Okay.
who's talking,
No.
hasn't paid the-
But
No.
on the same thing, would we be better off to take and break it down into multiple smaller? Let's just pretend it was in a CD. That way, if we did get pinched, I don't know if that would change any, that would, you're only gonna be, you only be penalized on what you touched,
That's
Right.
right.
so it wouldn't matter, yeah, I'm just trying to think of ways.
I mean, this, you can go back to the 90,000, so if, say we ended up with 75,000, but we end up using a local bank, we've invested $3 million into the local
Oh,
economy. I mean, so there's a
absolutely.
factor there, you know, go ahead. So,
You would invest $3 million
in your city.
into a local bank, I would, if I thought if I thought I was helping the local bank. In other words, here's $3 million now that you can go lend out to people in the community. But maybe the local bank, because interest rates are so cheap, says,
They have more money than they know what to do with right now.
right, I don't know if the circumstances of 3 years ago
With the same.
were the same as they are now. I don't know anything about this, but maybe they're saying, you know, Mark, it's probably more of a pain for us to deal with your 3 million. I can go right to the federal government and get it for nothing.
That's a good
And,
point.
and you're
Yeah,
absolutely right. A few years ago, when I first retired, I moved some of my stuff around, and I went to the credit union, and I tried to negotiate with them. And they said, absolutely not. I said, we don't need your money.
Right.
We don't need it.
Yeah.
So we can't give you a better rate. And all I was asking for was 0.25%
Yeah,
over what they were offering.
yeah,
And they said, no, we don't need your money. We have more money than we know what to do with.
See. And all that would be is just a couple conversations with your local banker, and they can tell you
I think that
what
would,
the market's like. And if they say we really don't need the money, well then, the fact that we invest at local just isn't so much more important now
I would.
as getting the most money you can.
Yeah,
That is important now.
I would,
Right now, people aren't borrowing money. Everybody's hunkered down. So their coffers are full.
I would say that'd be a good conversation to include him in, and let's find out from his point of view. And, you know, if it's not helping and there's, you know, then we look at other avenues for sure. I mean, if it was something that's, you know, he'd say, well, you know, if you take that, I couldn't loan money, we'll say something like that, then I would rethink my philosophy of government bonds, and I'd think more to, like you said, local, but I think we need to find that out. We should have that discussion with him.
Or it would reflect, and if we went out basically for a proposal from them, that would reflect in what they're gonna give us for a return, or,
And you could certainly, if you put it out to bid or RFQ, you can make a requirement of the submittal that they provide a certain amount of information that gives us an indication of what that 3 million would do or impact to them directly or indirectly.
you know,
If I may,
yeah, go ahead.
you send something out the bid and it comes back at 0.7, they don't want your money. Would be how I judge it.
Yeah, absolutely.
At 0.7
Supply and demand.
Right.
for a year, you say,
Fortunately, this time,
I go, okay.
Supply and demand.
Now 2 or 4% at some municipal, if we're allowed to do it, sounds better.
So basically, we've come up with, oh, right, you go back to this right now, it's, that 100,000 is just sitting in our checking account, getting 1.3% till they all mature at the same time? Or
It's
till the two CDs?
the current or the previous note holder on the CD was willing to reissue a CD for 3 months at 1.4%. So
okay.
we got a little bit better rate
Then
on a
0.7.
3-month CD than we were going to get on our putting it into our checking.
Oh, okay, excuse me, I read that incorrectly, so. I'm just curious a little bit more about these municipal bonds, I just don't know much
Because
about those.
municipal bonds, if my memory serves me right, they are guaranteed. The only thing, like a municipal bond for the state of Maine. The only way you're not gonna get the money is they default. They go belly up.
And then this-
There was a bunch of people that got caught when New York
You have
went
to do your
bankrupt.
due
When
diligence.
New York went bankrupt.
And, you know, I mean, there's good ones and there's bad ones.
Yeah.
There's A-rated and there's C-rated.
Yeah.
You know, you gotta, and that's where a good financial person can do a lot of homework on this, because they have access to information that we don't. The average, you know, Joe just doesn't have access to those resources.
Basically, so far, I see we've come up kind of with three options. One, RFQ, local banks to see what they'll give us for this amount, which I think we should go through to a consensus. Option two, I guess, is those municipal bonds been brought up. So that's worthwhile getting a little more information on it. I don't know anything about them myself, so I've heard of them. And then I guess option three maybe was an investment advisor, but, well, is that gonna
So
cost
you
us
could-
money
No,
or?
no, not to, at this stage, not to have them do any buying for you, no. Just to see what options are out there
Right.
that maybe the local bank isn't quite familiar with because they're a little bit closer to the market. And to just educate to what options would be available within some of these guidelines to give you the biggest return for your dollar.
Absolutely, but you also want to think of the federal, at the federal level too, not just
Yes,
municipalities.
Yeah, that's, I guess,
Yeah.
we could
Treasury
include that
bonds.
in there.
Treasury bonds, as I'm sure.
That'd be the-
Because this kind of money, you could get into treasury bonds.
If we go to an investment advisor, now how would we handle that? I mean, would that have to be an RFQ too? To get a couple people or do we just call someone and say, hey, what can you do for us? As
Right
in your email
now,
earlier,
right now, the city does not have an investment advisor.
so we'd have to hire.
We would
someone.
we probably would put an RFQ out, you know, who locally has the expertise and the ability to handle this type of funding, and we get,
Okay.
Is a financial advisor the same thing as a legal advisor?
As a what?
Legal advisor.
no,
Separate.
No.
Then I guess we should look for someone that can legally tell us what our options are with this money.
Absolutely.
And if bonds are available. If that's an option, then if I understand the terminology, then you might seek the advice of a financial advisor.
so we could
that-
probably reach out to our auditor and say, and ask them, since they deal with municipal accounts everywhere, and just say, we're looking at, can we invest in municipal bonds, treasury bonds, in addition to CDs? And please give us an indication, are these things that we can pursue? And if they give us a positive response, then we could put an RFQ out
Yeah.
for a financial advisor to help us locate maybe the best options to pursue.
Okay.
Now, from my experience with it, just for information's sake, a financial advisor does not make any money until he actually does something for you.
Okay.
Invest money or whatever, okay? So actually, a first visit to get educated.
Kind of like an attorney, right? You go
Yeah,
in,
it's just to
consultation.
see what's going on, what are the options, what can we do, what can't we do?
Yep.
You know, what's going on out there. From an education standpoint, that might help.
Oh, I guess, anything else to go for this stuff?
So I think we nailed it there.
With the three options, one, I guess, is an RFQ to local banks. Number two is nose around into municipal bonds and treasuries. Get a little more information on that. And number three, as you mentioned, which instead of the investment advisor, check with our auditor first.
So out of those three, I guess I would recommend we talk to the auditors first and see if those municipal treasury bonds are an option for us to look at.
Okay.
And
Guidance on it.
and if it is, we maybe ought to reach out to a local financial advisor and just say, can you come in and just give us some comfort level, share with us some information about these types of markets, what the current rates are out there, what the environment is, And after we have that discussion with them, then we'd be better situated to say, do we want to put an RFQ out for CDs or for these, and strategize that way.
So,
But I can reach out to the auditors today and see what information they can give us back or what response they'll give us, and report back to you, and try to set up another time, another meeting with another financial person in the area.
we're probably gonna have to have, well, yeah, I hope- we're probably gonna have to have a couple more of these. I mean, 2 or 3 probably realistically in this time frame. Go ahead, Mark.
If you were gonna send out a request for bids on to the local banks and get them back, how long of a time frame? I just like to reverse engineer it. How long do you think that takes? 2 weeks?
I think probably 2 weeks, because they're just going to look at their rate charts and maybe talk to their stakeholders or their board members to see if they want to adjust some of those. But I think within 2 weeks, you could get a response back.
So number option 2, did you have something to say, Doc? And option 2 and 3 kind of go together, the auditor and the municipal bonds, so we were laid down to 2. And that'll leave us, once we find out what we can do, those are basically our 2 options,
Yeah.
I guess. So you're gonna reach out to the auditors and find out what we can do. So I guess that's the next step. And as soon as we get that information, we'll schedule another meeting just as,
They might make a decision real quick.
That's right, might make it real easy.
well, yeah.
Yep.
So we can, yeah, as soon as we get the information, we'll get right on it and look at it and get this wrapped up hopefully as quickly as possible before it's the end of July is when we have
Right.
the timeframe.
Yeah. I mean, my experience with the municipal bonds was in my last community, when we had projects, if we wanted to construct a new sewer plant or build a major road, we would go out and in a sense get a loan or a bond for the project cost. And the bank, whoever financed that bond, would have to be able to go out and sell that on the bond market. And as a city, we have a bond rating, as was indicated. You go from C to B, A, AA, AAA. If as a city we have a great history of being able to pay back our bonds or have very, very low debt to asset ratio, then our bond would have a much higher rating and someone would be more likely to buy that or invest in it. And so our going out, spending $3 million on somebody else's project is putting our faith and trust that that other city or the treasury is going to make good on their own repayment of their project costs. So,
And some of these bonds, they can be like a CD, can be 1 year, 2 year, 5 year, you know, it works. So, and some of this, depending on rates that are being paid, you may want to mix them up. So you stair step. And, you know, you maximize.
Yeah. yep,
And a couple options too. I mean,
Yeah, but first got to figure out if that's even feasible.
and then there's no reason we couldn't split some bonds and some CDs. I mean, there's
Oh, yeah.
multiple ways to handle investments that best maximize our return.
right.
So,
Yep. And depending on which bond market you're going into or which financial firm you utilize to acquire those, they might also have additional stipulations, you know, what's their cut of the return and so on.
yeah, there could be a,
And so we'd have to be very careful when we do finally put this out to an RFQ for actual investment. What are the terms we're getting back? Not just what's that interest rate, but what are all the other
What's the
fine
yield?
print?
What's the yield in the pocket?
Right,
and
And
then
insurance.
the
Yeah.
insurance, as you mentioned, he's gonna check on that, so
right.
we'll see if we go above the 200 or 250,000. 250.
Okay.
Perfect.
So I don't have anything else, unless somebody else has anything.
Well, thank you for letting me know.
Yep.
Hey, thank you.
Glad you came.
Thank you, everyone, and good evening.